The bond rating of Walmart Incorporation is AA. For the past 3 years, 2020 to 2022, the revenue grew in US market, but it's dampened in non-US market. And it's alright, the assets in non-US has been cut by half, as you can see here. And also for US grocery market remains as the main key revenue driver, which is larger than the revenue brings from the whole non-US operations. If you are interested to learn more about other ways to invest in Walmart, go to maximavalue webpage, click the button to test your risk appetite. Then you can schedule a call with maximavalue consultants to learn how to grow your wealth. Stay tuned for our next video, how to invest in Amazon. Subscribe our channel and comment down below. And today we have a special guest, Maxima, an automatic cash flow mentor and a super genius that developed about 1,000 plus quant algorithm in his life. So today we will have Max to comment on Walmart, on how can you invest in Walmart right now.
If you were to invest $10,000 in Walmart in 1982, okay, you guess how much it be worth today? $1.9 million. Okay, your $10,000 in 1982 is worth $1.9 million today. And of course, with the soft technology today, we can even automate the whole thing.
So what you mean is that other than just buy and hold, and what we have learned, what we have heard of, buy and hold a paper stock, so now there's another way to actually invest in public traded company, right? Perhaps you can share with us more about this, like how does it really work?
Okay. You can go. Of course you can do this with any platform. Some platform may give you the opportunity to invest in the real stock, whereby you can hold the real stock, buy the real stock, and some is just a different contract, different contract whereby you are not really buying the real stock, but you want to capture the capital gain through their price movement.
So what you mean is that you can ride along the trend, right? So what's your point of view right now? Like what's the trend of Walmart?
Walmart today, I would say from what I can see the data, the short term, mid term, and long term, their prospect is going up. That means the prospect of this company is going up. So long-term prospect is going up. So you can either do dollar cost averaging, whereby you regularly collect the stock, like invest in the stock day by day, week by week, month by month, or regularly year by year. Or you can also trade the stock and capture shorter-term profit by using technology.
As of third quarter 2022, operating expenses are higher than net sales for both North America and international market. AWS services remain profitable. It does seem like the income from AWS services can carry the other two markets, but in reality, 3 billion net income loss has been incurred in third quarter 2022, a significant difference from third quarter 2021, which profits 19 billion. Online stores remain as a key revenue driver. However, you can see high growth in other type of revenue, which includes sales related to various other offerings, such as certain licensing and distribution of video content and shipping services, and co-branded credit card. Today we have special guest again, Maxima, the quant firm CEO. So he himself has actually developed his own system to help manage up to 30 million portfolio. So today we will have Max to comment on Amazon. Like what's the trend right now? Like should you invest in right now?
Okay. The long-term prospect of Amazon, it basically is going up, and of course for the past 1 year is coming down. If you were to invest every 1,000 of yours in since Amazon started in 1997. Okay, 1997. Guess how much it worth today? Okay, every 1,000 of yours will worth more than $1 million. Okay, more than $1,044,000. So of course, for the past 1 year, many companies, technology, especially in technological sector, is coming down, and including Amazon. Okay, the stock price is coming down for the past 12 months. By using today's technology, not only you can invest in one lump sum, okay, you can also regular invest monthly, yearly, monthly, weekly, or even daily. Okay, in Amazon, even when it's coming down, you can capture the opportunity.
So I guess moral story of this video is that when you see a kid of your neighbors or whoever, right, if they are working really hard in the garage and they say they want to change the whole world, please, perhaps you can invest in them $1,000 that day. Then who knows, in the future they might be millionaires, right?
It might also worth nothing.
Yeah, but 1,000 is a great investment if you can achieve 1 million or you just lose that 1,000.
Okay, basically you can diversify. Diversification is one way to reduce your risk. Of course, investment always you need to use your spare cash, the cash that you don't need for emergency or living expenses. Holding power is very important in long-term investments. Your long-term success as an investor, holding power.
So invest your spare cash, invest comfortably, and of course, always diversify, like what Max said. This comes to Maxima Value is able to help you to diversify your portfolio in different assets or even different brokerages through technology. So if you are interested in it, so you can click the link down below to schedule a one-to-one consultation call with Maxima Value consultants, where they can help you to tailor your own investment plan rather than you just follow along with others. When it comes to investment, Maxima Value believes that it's not a one-size-fits-all kind of solutions. It's your money, your way to invest. Revenue is highly exposed to crude oil, as you can see here. High free cash flow, even more than Apple Incorporation. 107 billion at the end of 2021 and 110 billion US dollar at the end of third quarter 2022. 349 billion US dollar of revenue, but out of this amount of revenue, 147 billion US dollar is contributed to the government of Saudi Arabia in the form of income taxes, which is about 50%, and royalties as well as dividends. Today we have Maxima, Fund Firm CEO here as our special guest. Max, what do you think about Saudi Aramco? Like, how would you analyze it?
From the data, I can see about 90% of Saudi Aramco revenue is coming from crude oil. So basically, now we look at the crude oil price. Okay, if you were to hold buy crude oil, okay, at the lowest price, about $15 in 1987, okay, until 2022, the peak price is about $123. That means every $1,000 you invest in this is going to return into 7 times more. It is more than $7,000. But from here we can see that the crude oil price is highly volatile. It's highly volatile in the sense that in 2020, we can see that the lowest it go is around $11. So that means is the range. The range here is like from $11 to $123, $123 within this 2 years time. So it's highly volatile. So I think probably you need more money in order to invest in this. And also the price is very important, your entry price.
Okay, so Mac's suggestion is that Saudi Aramco, as Saudi Aramco is highly exposed to crude oil, so it is as volatile as Bitcoin. That's what you mean, right?
Yeah, it might be the case because 90% of the income come from crude oil.
Okay, so that you that's why you suggest investors, only those who have a higher capital amount,
Yeah,
try in this.
higher capital amount, and also try to diversify, and also probably you can treat this as part of your portfolio.
Okay, and then you also think that the entry price would be is very important whether the investors decide to enter into this market as well, because it fluctuates really a lot. Like what you said, like from $11 to what?
$123 within this 3 years time.
Within 3 years time.
2 years time.
Yeah. So it is highly volatile. So it's like about 10 times, right? 10 times of the amount, 11 to 100 plus. Within 2 years, it can fluctuate from 11 to 100 plus, 100 plus to 11. So that is crazy. Positive working capital shows that your business has sufficient liquid assets to pay off immediate debts. By contrast, negative working capital shows that you will struggle to pay immediate debts if restricted only to your current assets. As you can see here, it's negative. Main revenue driver is the marketing of refined products. Although in general, PetroChina makes most part of its revenue within China's mainland, when it comes to its main revenue driver, its region outside of mainland China, that contributes to the revenue the most. 1 trillion RMB liabilities, which incurred the most from head office, only then the exploration and production. And one thing to note, if you know Chinese, always refer to the Chinese version. Today we have Max here. Max is an automatic cash mentor, so he has successfully transferred his quant skills to his students within 1 week time. So Max, what do you think about PetroChina?
PetroChina, well, from the data I can see, the long-term prospect actually is going down. And if we were to look at FTSE China Air 50 overview, the prospect potentially it can it's quite volatile, highly volatile in fact. Okay, the highest it goes is 23,000 points, and the lowest it goes is around 3,500 points. So potentially it can come down to 6,000 points, 10,000 points, 6,000 points, or even 3,600 points. So especially if we were to look at the shorter term time frame, like for example time horizon like 1 year and below, it is very clear it's coming down. It's downtrend, and overall stock market for China is also downtrend within 1 year time. So the nearer term, shorter term prospect.
Okay, so what kind of advice will you give to our viewers here regarding PetroChina?
Okay, obviously when things are coming down, you can profit by shorting the either the index or the stock. If we were to consider other factors, like for example the cost of shorting and also liquidity, it might not make economic sense. So you might want to avoid them altogether.
The company's revenue is highly diversified. The main revenue is gasoline, but it is only the 25% of the whole revenue. Although its revenue is 2.7 trillion yuan, its expenses is 2.6 trillion yuan worth as well, which is 96% of its revenue. Compared to its peers, Saudi Aramco, I have put down the link in the description in case you're interested to learn more about it. Saudi Aramco's capital expenditure in 2021 was 31 billion US dollar. Sinopec's capital expenditure is approximately 12 times higher, which is 374 billion US dollar. Where does the money go to? You can learn more about it in another video of us, where we talk about its sister company. We will talk about why is it its sister company, PetroChina. I have put down the link in our description as well. Feel free to watch it too. Okay, Max, our senior portfolio manager here, what do you think about this stock at the moment?
Looking at the long-term prospect of Sinopec, this stock actually reached its peak at $20, 20 yuan, more than 20 yuan per share in year 2007, and since then it dropped to now the price is 4.5 yuan, and it has been more than a decade. It haven't recovered to its peak. It has been stagnant. The stock has been stagnant for more than 10 years. Shorter term trend is within 5 years. In fact, with the 5 years trend is actually downtrend, still on the downtrend, and it has the potential to drop to 2 to 3 yuan.
Okay, so what kind of advice would you give to our viewers here regarding what to do with this stock?
From what I can see, it has been stagnant for more than a decade. Not much growth, and 5 years is downtrend. So I would say probably in the next 5 years, we still need to avoid this stock in the near future.
Okay, thank you Max for your kind advice for our viewers. If you guys are interested to learn more about investment and then what to avoid and then what to invest in, you guys can actually sign up for Max webinar here. In this webinar, Max will talk about how to invest and trade multi-assets, which is very important in this market right now, because as you know, currently, I mean, this video is made in 2022, right? It's now is so-called the post-pandemic, and the market is not really doing well right now. It's sort of like in the midst of recession. Max have made a webinar to teach you how to exactly profit even in downturn kind of economy as well. Feel free to sign up for his webinar. I have put the link down below in our description. Go ahead. Thank you so much for watching this video. Hope to see you next time.
See you.
Cash is king for Apple. Its strong cash position is its major strength. The company holds cash and cash equivalent of 34 billion US dollar and also holds 27 billion US dollar in marketable securities. You can see on the current asset side that can be easily be converting into cash. It also has non-current marketable securities of 127 billion US dollar. Thus, it has an ample cash chest. A lot of this is held overseas and the company would have to pay US tax on the money to bring it into the country. That is why company prefers to borrow money to engage in its share buyback program. Previously, Apple's working capital has always been positive, but is negative in recent years. Despite Apple's revenue has increased, but their cash dropped. Now we have Max here, who has developed 1,000 plus of quant algorithm that help his investors and clients and members to manage their own portfolios. Max, what do you think about Apple's stock right now? Like, what's its trend lately?
Looking at the data from 1982, Apple stock in long term is uptrend. The long term prospect. And if you were to invest $1,000 in Apple stock since 1982, guess how much it's worth today? Okay, it is worth at least 1.09 million US dollar. Okay, every 1,000 of yours invested in Apple stock since 1982 will be worth more than 1.09 million US dollar. But as of today, by using today's technology, you can even use technology to automate the whole thing. And even though the shorter term prospect of Apple, it may be down at the moment, okay, downtrend within 1 year period, but you can even profit in the downtrend.
Perhaps you can tell us more about how can the viewer profit from the downturn economy? You know, just a sneak peek. You know, just some very brief description.
Okay, you can capture the shorter term profit through by shorting the stock, by doing short the stock, sell short the stock in the shorter term to capture short term profit while holding on your longer term stock. By using quant technologies or quant algorithms to do it, you can do it semi-auto or even automate fully auto to profit from uptrend or downtrend of the company.
Next, we will see how Max algorithm, right, can help you to actually generate profitable income, whether it's a uptrend kind of economy. I mean, when it comes to uptrend in Apple or downtrend in Apple. So as a case study. Thank you. Let's talk about Exxon's latest financial highlights. ExxonMobil markets products around the world under the brands of Exxon, Mobil, and Esso. Outside of the United States, Esso and Mobil are primarily used, with Esso operating in 14 countries and Mobil operating in 29 countries and regions. Be it upstream, downstream, or chemical market, ExxonMobil generates relatively more revenue outside of the US market, which is approximately 62% of its sales and other operating revenue. And these are the top 7 significant non-US revenue sources: Canada, Singapore, United Kingdom, France, Italy, Belgium, and Australia. Third quarter earnings were $19 billion compared with $17 billion in the second quarter of 2022. Excluding identified items, earnings of $18 billion were up $1.1 billion versus the prior quarter as higher natural gas realizations, record throughput in energy products, and continued cost control were partially offset by lower crude realizations and moderating industry refining margins. Cash increased by $11.6 billion in the third quarter with free cash flow of $22 billion. Net debt to capital ratio improved to about 7%, reflecting a period-end cash balance of $30 billion. The debt to capital ratio is now 19%. Asset sales and divestments resulted in $2.7 billion of cash proceeds during the quarter, bringing year-to-date proceeds to nearly $4 billion. Max has been developed thousands of quant algorithms that have managed $30 million portfolio that have been tested and proven for the past 8 years since 2014. Okay, so Max, what can you tell us about this ExxonMobil stock?
ExxonMobil stock, looking at the long-term prospect, is uptrend. It's actually uptrend. If you were to invest, okay, $1,000 in ExxonMobil in 1982, okay, until now, you should have turned your $1,000 and become $29,000, slightly more than $29,000. So that means every 1,000 of yours invested in ExxonMobil in 1982 until today will become more than 29,000. However, if you were to optimize by utilizing today's technology, okay, from 2 years ago, which is in 2020, using some of our quant algorithm, every 1,000 of yours will become more than 18,000 in just 2 years time. Versus from 1982 until today, which is about 40 years.
Seems like quant technology is really revolutionary the whole investment experience, elevating the investor experience when it comes to how to optimize or even maximize the profit of your investment, right? So I just want to know, why would that happen? You know, what is that, over 40 years, right? Then it will just grow about 20 plus, and then versus that, using the quant algorithm that you can generate almost close to the profit in just 2 years time. So perhaps you can explain to us a little bit, I mean briefly, like how is it even possible?
Okay, because if for this stock, the price fluctuation is actually quite huge. if you were to hold from, let's say you were to buy at 2014, okay, in 2014 until 2020, you actually lost quite a lot. You lost almost more than half of your money. So since the stock is highly volatile, so it's either you do a more foolproof way of investing, which is dollar cost averaging, your regular investing. You can regularly invest each and every year, each and every month. But using technology today, okay, you can actually micromanage, not by you, but by system, automatically, which can help you to do it more efficiently and effectively.
For Shell, its bond rating is AA- by Fitch, announced in 7 December 2022. It's profiting now after a slump in 2021. Working capital is positive all the way, meaning during the loss in 2022, Shell was in a good position to navigate through the downturn as well. Main revenue driver is downstream by selling the oil product, which is about 80% of the revenue. You might be asking whether we can profit in downturn economy. Like for example, last year in US oil, it's negative. But you would think that whether it is possible for this kind of trend, right, you can make money or not. So today we will have Max here to answer that question. So Max, what do you think about Shell, this company? As we can see earlier, Shell was losing money last year and then I would say they recovered this year. So what can you see about Shell?
On the long-term prospect of Shell, if you were to invest your money in Shell since 1996 when you first start trading, 1996, guess how much your money will worth today? You lose almost half of it, 52% of your money. But if you were to invest 1 year ago, of course you gain 43% over just 1 year in Shell. It's quite volatile, not so predictable. The risk is quite high if you were to invest in individual stock. And the long-term prospect of Shell is the stock actually is downtrend. Alternatively, you can also invest in FTSE 100, which Shell is one of the major component. Okay, the UK index, UK 100, FTSE 100 index. If you were to invest in FTSE 100 since 1984, from the data here, how much your money will worth today? You'll gain more than 581%. That means every 1,000 of money of yours, you will be more than 5 times more. Okay, so although it is still also quite volatile, okay, if let's say you were to buy and hold for long term. Alternatively, there are another option which is safer, which will incur no more than 24% maximum risk, and your returns will be higher in shorter term, which is you can capture the shorter term profit by trading it in short term. For the past 2 years, your gain from the data here is at least 45%.
Okay, thank you Max for explaining. So what Max said is that by using the quant algorithm that has been developed by Max himself, like for the past 2 years, although Shell is not looking good on paper, on the share price and everything, and perhaps like what Max shared earlier, perhaps like I think for the past 1 year the investor will be able to earn is because it's so-called undervalued 1 year ago, right? Like, is that the right way to say it?
Yeah, I would say undervalue or not, it depends on how you define undervalue. So when you think that the value is actually, the long-term prospect is actually up, on the upside, and now the price temporary down, then it's undervalued. But when you look at the long-term prospect, if it's on a downtrend, then I wouldn't call it undervalued. So in fact, I would say you might overvalue it already. If let's say you were to buy it now, or if it's in a downtrend.
Okay. So since 1997, seems like there's a huge drop, and then it sort of linger around this line like for quite some time, right?
Since 1997. 1997.
Yeah, perhaps you can explain to us why would this happen and what should investors look out for when these kind of things happen?
In fact, at that time, the prospect is not that good. Of course, they also have stock split, which if let's say you were to buy physical stock, okay, the real stock, holding the real stock, then you might get more stocks even when they have stock split. But if you were to trade the contract, then you might suffer some losses. Even you take it into account of the stock split, you might still incur some losses. Okay, if you were to hold from 1997 all the way until now, which is 1997, it's almost more than 20 years. Yeah, 25 years around there.
So am I right to say therefore you think that the investors to diversify their, not diversify, to manage their risk, right? It will be better that they invest in UK 100.
If you would invest in the index itself, it already help you to diversify to 50 largest stocks in UK. Of course, another way to do it safely or safer will be you capture shorter term profit, you don't hold that long. Then you reduce the risk from the data I can see here. If you were to do it for the past 2 years using one of the fund algorithm we developed, have more than 45% gain on 2 years time with risk not more than 24%, maximum risk not more than 25%.
Okay, so it would be good if you look at a comparison, right? If you look at 5 years. Okay, so let's say if the investor that invested 2 years ago, like January 2020, which is about 2,248, right? So they'll be still winning some of the money. Slightly winning a bit. Okay, so let's say the investor had invested their money like early January of 2020.
Less than 5%.
Yeah, until now they should earn less than 5%. But of course, they have to go through this roller coaster, right? Where they drop
more than almost half.
Yeah.
More than half of your money as well.
Yeah. So basically, by looking at this chart, right, if the investor had invested their money on early January 2020, and then they have to go through this roller coaster that they might lose half of their money at the point of time,
and then recover back to recover their money over 2 years time.
Yeah. So these 2 years time, they will still be just recovering the money, right? And then perhaps earn a little bit percentage.
Yes.
But then by using your software during this turbulent moment, investors are able to actually generate 45% of profits.
Of course, if you were to do it manually also can, if you're very good at this, then you might be able to capture short-term profit as well. But just that you need to spend the time to do this in front of computer and to do this. If you were to automate this, then of course you save yourself time.
So basically, you can live your life.
You save yourself a lot of time.
Yeah, you can live your life and earn money at the same time. That's what Max wanted to develop this algorithm at the first place, like you mentioned, like before.
So save time, save life. Because all of us, no matter how rich or how poor you are, our time is the same. We have the same scarce resources, which is time.
So what Max is saying here is that you can use shorter time to generate more value, therefore more money for yourself.
Yeah, of course, there are some risks. You still have to learn. Good things in life may never be so that easy. You still need to learn how to do this. It means you need to learn more about investment so that you know how to do your money management. Even though you have a very powerful strategy or system to help you, you still need to master the money management and risk management.
Okay, so when it comes to this, Max does have a webinar, how to invest and trade multi-assets in any economy, be it upturn, downturn kind of economy. If you're interested, please click in the link down below in the description so you can learn more from Max, like how to manage your money, how to grow your money, especially in turbulent times like this. Thank you so much for watching. That's all from us. We will see you next time.
See you.